because well, we need to try different platforms. So anyway, let's just get right into it. A couple housekeeping things on my side.
Hmm.
Um, it is the long weekend,
Yes.
so we will not be open on Monday. Um, However, if you have any questions or anything like that, certainly send them over the weekend, and we'll get to them as soon as we can. The other thing is, can I post a link somewhere here? The Q&A maybe. Last night we did interview Jessica Houle, who's an estate lawyer. We promised that we'd be bringing somebody in like that. We did that. We did like an hour and a half. It was
Yep.
huge, and we could have
Yeah,
probably went another 2 hours.
for sure.
Um, so that's exciting. I'm actually going to put the link to our YouTube channel because some people have been asking, and we haven't officially sent the email out. But I'm going to put the link to the YouTube channel in the chat here once Ben starts talking and I get a minute.
Hmm.
Also, too, for the podcast, I know I keep saying that we're going to send that out. We haven't sent that out, so I'm just going to put the link directly in this chat here. So
Hmm.
for all you keeners that come and join us on Friday afternoons, you guys can get a jump on it until we get that email out finally.
Hmm.
Okay, so without further ado, it is the long weekend, so I don't know which we should start with, Ben. Since it's the long weekend, we should probably start with cannabis. Seems the right thing. On fire, so to
Yeah.
speak. Yeah.
Yes, it certainly has been, I guess. Yeah. Yeah. So Monday is Family Day in Canada. So because it's Ontario, sorry, excuse me, Family Day in Ontario, and TSX is in Ontario, so we're closed there. But US is President's Day. So it's rare when they line up. Obviously nice or break from the trading daily action and things to pay attention to. So, but cannabis, yeah. So that's probably a multi-pronged event. Why that's happened? What's happened? Since Biden has come in, he's essentially said that. Well, he doesn't said outright, but indicating that they will legalize marijuana in the United States. So all these cannabis stocks that were under pressure, kind of selling off as we were meandering, as the potential that Trump would continue on. The stocks kind of got beat up. I know a lot of these companies themselves got into serious challenges. They burned through most of their cash over the last couple of years, but we had a huge rally, and we rallied up until I guess on Wednesday. We had a bit of a sell off yesterday. We had like Tilray was down 50% yesterday. And so, we've had quite a bit of violence there. You had, again, another talk about Reddit coming back and buying the marijuana stocks. So I think you've had a combination of things leading to that. Obviously, we owned a little bit of MSOS, which is the cannabis ETF, which I'd sold last week at some point on the initial run up. I've looked at it as possibly buying back with a sell-off. So, I think it's whether you like it or not, it seems like it's going to be legalized and taxed, and lots of positives for the U.S. government, of course, if they can generate tax revenue from it. But yeah, the stocks have caught fire, and I think Reddit jumped on the back of this one because they thought they could move those prices higher too.
Yeah, right. So, yeah, did you mention right there why you think that there's like this big resurgence after all this time? I mean, it was obviously a big bubble right a few years ago,
Yeah.
2018. So, what do you
Yeah.
think's sparking that? You got that one, eh?
You're working on all the puns tonight. So I think, yeah, it's Biden. I mean, it's primarily driven by Biden and legislation and what they expect to happen. And legalizing in the U.S. is huge for them. I think that the U.S. Cannabis companies are cheaper and more appropriately priced. And so, yeah, there's probably still some upside there. Some people don't like it. So, yeah, it's interesting, right? To have lots of conversations with people about socially responsible and friendly investing. And some people don't seem to really like the cannabis space. They kind of drop it into the alcohol space. And so we'll see. I've have, it's not something that I have a huge amount of interest or follow closely. I follow it closely enough from this perspective that if you want to have exposure to it, I'd buy it through the ETF, or maybe cherry pick some of the names like Canopy or Tilray, some of the bigger names. But it's also lined up for what you want to own at this part of the cycle, which they'd fall into the consumer discretionary bucket. Maybe it's consumer staples for some people, but mostly consumer discretionary. So this is the part of the cycle you want to own these kinds of things. So they've had a lot of things working for them.
Right. Well, speaking of things in a bubble, I mean, you can't read anything right now without saying that we're in a massive bubble right now. And just,
Mhm.
every warning sign known to man is out there right now that it's a massive bubble. Where do you think we're at with that? And what's your prediction as far as that's concerned?
Yeah, well, look, you gotta follow the data, see what the data is saying, and follow what's happening in the markets at the same time as well. So, I think we oftentimes get caught up in just kind of thinking about the feelings of what the sentiment is and what the feeling is. But yesterday was a great example where we had the markets down and we had volumes down. So what that is typically telling you, unless there's a black swan event, is that the markets are still in an uptrend. And so, well, the feeling is that we're bubbly. You have to just pay attention to what's happening. And what's happening is down day in the markets, volumes down. People aren't really that scared. So you got to buy that dip. If you have volumes up massively yesterday and a down day, well, maybe it'd be a different signal and say, okay, maybe we should start to think about this turning. So, I mean, couple that with this morning, we had equities down, we had bonds down. And so when you get that kind of set up as well, it's kind of a signal that, the market's telling you that it's probably going to start to turn higher. And of course, by the end of the day, we turned a little bit higher and bonds continued their way a little bit lower. So,
Yeah, it seems like whenever there's a sell-off, like it's an immediate recovery,
mhm,
right? Like
mhm,
within a day or two, people
mhm,
are, and I think they're doing exactly that, right? Like you see a big sell-off, and people
mhm.
just see that as an opportunity now, right? They know it's coming back, so they're buying in as the sell-off is happening. Is that what you think that what's happening?
So I think that's what's happening. But what's going to happen at some point is that's not going to be the case.
Yeah, yeah,
At some point, you don't buy the dip, and we roll over hard. And so I think that it's the uniqueness is finding when that is coming. As I mentioned on the annual, every time we talk, we're in that kind of quad two and that growth plus inflation with butting up against the next transition is supposed to be slowing growth, slowing inflation or deflation. And so, yeah, that when those kind of meet, that's when you don't buy the dip. And so, you have to follow it daily. What's the market doing? What's volatility doing? Again, market went down yesterday, volatility went down, and volumes went down. Those are signals to tell you that you stay with the trend. When one of those three don't match, then you need to see, is this the start of a trend or is this just in the middle of it? And so you got to really pay attention to it every day.
right, right. Okay, so what did you do this week? Just take it a task. I'm just gonna
Yeah,
take it a task.
let's do it.
What do we do for clients this week?
So look, there was a number of things throughout the week. I'd taken some profits on Japan and bought South Korea. There was a dip on South Korea on Monday, and Japan was up. Japan kind of probing the top end of the range. So I made that trade. Twitter had some good earnings this week, so where I own Twitter, I cut it in half, and it added that position to Freeport McMoran, which is copper. And save, which is Spirit Airlines. So I think we do have some positive potential setup there with some of the airlines. Spirit sold off a little bit as well, so I think it's a good matchup. Take some profits on a winner and buy something that's down from that perspective. I'd bought probably about a month ago some Swiss francs FXF in ETF version, and sold that and bought Nasdaq, the Qs, on Wednesday. In the last couple of days, I guess I bought a couple of SPACs, BSPE and CLA. These are both special vehicles that, they raise money and then decide to go public. So CLA and BSPE, both look pretty attractive right now. Added a little bit of corn, and what else did I do? Had some money in short-term bonds, PIMCO short-term bonds. It's one of their shorter-term investment vehicles. So I had moved some of that money to longer duration, so extended kind of the yield. A couple of weeks ago, yields are still pressing a little bit higher, so I extended duration a little bit more and continue to do that. We're kind of approaching the range in the US 10-year, 110 to 120-ish. And so as we start to approach the higher yields, I'm looking for opportunities to add some duration, because to your point earlier in the conversation, at some point, that yield's going to stop moving up, and typically when that yield's going to stop moving up, it's when the equity market's rolling over. So constantly trying to adjust their risk and reward with portfolios.
Yeah, that's got to be a tough thing to do right now, right? I mean, everybody, we get calls from clients all the time. Everybody's super excited about what the market's doing right now, but you also have to be wary about the bubble, the potential bubble, right? All the time, and
Yeah.
position the portfolios against that, right? Everybody wants maximum growth when it's growing, right? But you also have to, hedge against that growth as well.
Mhm. Well, it's a matter of continuing to fine tune that. Yeah, everyone wants their foot to the pedal when things are good, but then they want to be full brakes when things are bad. But you got to make decisions in advance of that. I've seen a few stocks in the last few weeks with this Reddit issue. If a client's asked me, why don't you put stop losses on them? Well, some of these companies that are quite volatile, if you put in a stop, sometimes these companies gap down 20% at the open. If you had a stop in there, you could have been taken out of your position for no reason. So, when in volatile periods, I try to run without big stop losses. So I try to do it in other ways, either with puts or with adding duration, so long bonds, and even looking at there's an ETF called Tail, which is one of Meb Faber's products, and it's again like they buy some treasuries with puts to run in portfolios. So always looking for ways to kind of manage that, because we've had a good run. And at some point that run ends, and so you got to continue to take advantage, take your profits, add some protection, continue to add protection as you go higher.
Gotcha.
Yeah.
Gotcha.
Yeah.
So markets closed Monday, both Canada, US. So what are we thinking for next week? What's your plan for the shortened week next week? See how it plays out over the weekend, and then see.
Yeah, we'll see how it plays out. Obviously, there's continued talk about crypto and what's happening there. Lots of action going on in the space. Like, you're seeing lots of ETFs coming to market. You're seeing lots more institutional chatter around what they're buying. Banks are starting to produce their own products. Like, you're seeing a lot of kind of discussion into that space. So, it's driving some of the names. Like, I bought Galaxy a couple of weeks ago. It's up about 50% from there. So you're seeing some of these names are really go. And I start to pay attention as you see just blind buying into this and saying, are we starting to get into the top end of the range? Does it make sense to trim some of it? But so it's starting to get me to think about that.
Sure, sure. And I don't know if you want to, if it's worthwhile mentioning, you tell me, but just to kind of open the door here, you had a couple interesting calls this week, one about India, one about crypto. So I don't know if there's anything that you pulled out of either of those.
Yeah, so good call with the Indian investment portfolio manager that I've been looking at putting in portfolios. It's called the Sun Life New India Fund. As I look at it and talk to him, I had really interesting perspective. My view is that 3 to 7 year time frame. I don't think there's going to be a better country to be invested in. Short term, I'm not sure, because I do think there's a bit of a crack in the market ahead. So I'm still very optimistic, still very positive what's happening in India. Listening to him talk about the growth that's happening, like the potential growth too. When you look at, you compare a U.S. company or a Canadian company with a similar profile versus an Indian company, the growth profiles aren't even in the same ballpark. So really excited about that. In crypto, yeah, I had a good conversation with someone that's building a crypto product for corporations. Interesting view on what they're doing. One of the things that I took out of it, where someone's asked me this before, what's the cost to mine per Bitcoin right now? Oftentimes when people talk about gold companies, they say, well, it's $1,000 an ounce to mine the gold. Simple math, if gold's trading at $1,800, your profit margin is $850. So one of the things I couldn't really put my finger on, he seemed to indicate to me that the price to mine a coin is about 12,000 US per coin. So as if you get Bitcoin here in the mid 45,000s, you can understand why these companies continue to mine and why companies continue to invest in mining. So those are kind of the two highlights that came out of those calls.
Right. And over the last few months, we've been looking for somebody like a crypto expert. So I think we found ones that are actually likely. We don't have anything booked yet, but hopefully in the next couple of weeks, we're going to have them on the as a guest on the podcast, and we're going to ask them all the questions you've been asking us. So even just to simplify it for people and figure out, why is there value in this thing, and how does the mining work, and simple questions like that, I think we can answer for a lot of people.
Mm-hmm. Mm-hmm. Yeah, for sure.
Yeah.
Yeah.
Great. Do you have anything else for
Yeah,
this
so I
week?
just really wanted to talk about. So 2 weeks ago, I'd mentioned the deals that came to market. So the companies that were raising money. I mean, this was by far one of the busiest weeks I've seen in years. So there's probably something close to 20 equity raises this week. So I can't even remember all the names off the top of my head. Obviously, I look at them as they come through. But the one that probably did the best was Denison Mines. So they raised a bunch of capital. That stock has ripped since they raised. So the market is probably happy to see them get some money aside. It's a copper mining company, Flower Corporation, cannabis company, Brookfield Renewable, DRI Healthcare. You had another company coming to market called Loop Energy, which is kind of in the green energy space, ABC Technologies. I'm just trying to think of what other names. Ballard Power came, that traded well too. So, it's something I haven't seen in a long time. And I think it's just, the markets definitely seems to be quite apt for taking down these kind of deals. The bond deals quiet this week, but certainly on the equity raise side, there's lots of action, and it's across all the different firms are raising right now. So interesting to watch, and we'll see. I'm interested to see how the market digests this and the impacts, and so I continue to watch that and pay attention to it.
Yeah, for sure.
Yeah.
And how do the new issues fit into the portfolios? Like, do you ever add any of the new issues? I know, like, we have some clients that we take them down for, but
Yeah. Yeah.
but do you ever add them to the portfolios for yourself, or?
So on occasion, sometimes you get a company that will raise money that's kind of thinly traded, and so you like the company and you want to be able to take 5 or 10,000 shares so you can put it across the client base. So occasionally I'll do that. Sometimes the bonds actually look quite attractive, so I'd be more keen to look at some of the corporate bonds that you can't get access to typically. But on the equity side, it depends. I'd say if it's thinly traded and I want a decent size, like with the Bitcoin last year when I bought GBTC, that was a new issue. So you bought it at NAV, you get the strike price. So I want to. So I want to do it in that case, and so the Bitcoin was probably the easiest one to do that. So I did that.
Yeah.
Yeah.
Well, we get a lot of questions too. Like when you see one that's overly hyped, right? Like you get an Airbnb or something like that. That's been,
Mm,
you know,
yeah.
and people ask us, "Oh, why didn't you get any of that when it comes out?"
Yeah.
That's well, do you want to explain why we can't get that a lot of times?
Sure, like US deals we can't participate in.
Hmm.
So you have to be a US investor to participate in any of the US deals.
Hmm.
So certainly pay attention to them, see as they come out. In Canada, the market's so narrow. It's I get to see how a lot of these deals come out too, and y- which people don't typically see is you see how much goes to institutions and how much goes to give us access, which they call retail. And so typical deals that are really, we'll call it hot, that sell quite well. Like Shopify, when they raise capital, we still participate in it, but the Shopify deal would be 90% institutional. So that would go to CPP, the pensions, and 10% retail, which would be us. We would get access to that. And then it would be split among the different syndicates. Certainly pay attention to it, but it's not you can kind of buy whatever you want. And then on the bond side of things, that's almost 99% institutional now. So National Bank does a great job on these bonds, so we do get access, which I didn't have access to before at CIBC. So I'm paying attention to see how those come out.
Yeah, absolutely.
Yeah.
Malcolm wants to know if you think the SPAC market is overheated.
uh, That's a great question. I think that I'm following SPACs quite closely, and I guess I think about it a couple of ways. I say the short answer is it's pretty hot right now. I'm not sure if it's a run out of runway or not yet, but I do think it's an alternative way to IPO. So as these SPACs have come out, they've come out more with the kind of the view that we don't want to take the typical route where we're going to have to pay the syndicate 6 to 10% to raise capital for us. Maybe we can set up a SPAC. So somebody will set up a SPAC. Maybe it costs them a little bit less. Well, it always does cost them a little bit less. You get to pick your management structure, and then you can go buy companies. So there's still a lot of interest and demand for it, both locally and globally. So I've bought a couple of SPACs, and some of them had trade quite well. I'm certainly interested in what the underlying is. So like EOS Energy was a SPAC that I'd bought, and it's a good company that they bought. I think that that one's a good one as well. QuantumScape, which was a SPAC, but QuantumScape now is Bill Gates' battery company. I think I'd look at them more from the perspective that they're quasi IPOs, but you get a chance to get a little bit of runway before you want to buy them. So they'll come out as a SPAC. You'll see what they're going to buy. Then, as the market tries to digest it, there's some opportunities there because all these SPACs aren't listed in any ETFs or any don't trade on any markets the same way. So there wouldn't be the same kind of institutional drive of it. But once they do kind of de-SPAC, we'll call it, that's probably where you start to see them get added to the indices and you start to see that kind of institutional pull on it. And so there's still opportunities there. I mean, if you want to play it from a passive perspective, the SPAC X, I think it's SPCX. So Mark Yusko has come out with an ETF where he actively manages those SPACs. And Mark Yusko has put out some really, really great stuff on kind of discussing where and what SPACs could be as the world goes forward.
Gotcha, gotcha. And I don't know if can you see the chat on the
Ye-
side there?
Yeah, I just got to open it up, I think, here. Let me see
Yeah,
here.
just Lyle's got a long one there. Just
Okay. Um, so just market buoyant, growing first half. However, if mid-year pandemic not under control and behind us, if the economy not on a real recovery path, then all bets are off. In severe market turbulence, major market drops likely. Is that too pessimistic or optimistic? Yeah, so I think my view is that the back half of this year, there is some risks and some bumps. You know, or when we think about the last 12 months, when we look a year ago, I mean, the market ground to a halt, the economy ground to a halt. So year over year, GDP, year over year, inflation, all this stuff's going to look really good for the next, so we'll call it, well, probably now 4 to 5 months, maybe a little bit less than that, maybe 4 months. Um, but on the back of that, you're going to have challenging year over year inflation and challenging year over year GDP numbers, because last summer we actually had a spike. You know, we saw a spike in employment and GDP and CPI. So we saw a big spike. And so when you look at those on a 12-month year over year, which is typically how the market does, you know, we're setting up for that deflation, plus slowing economic activity. And so that combination is, you know, stagflation, where you don't want to be long pure risk, we'll say. So I think there's definitely some risk in the back half of this year. So I'm very conscious of it and thinking about it all the time. So as you stay long, we'll call it risk assets, you got to think about, at some point you have to pivot. In my view, you're going to have to pivot, but you just have to watch and prepare. And so I do think it's a challenging second half. But I do know that the central banks and the central planners of the world, with Yellen, with well, now we see Lagarde, and we see all the other leaders. Obviously, you see a new prime minister in Italy, who is former ECB head, who printed and bought everything. So so the leaders of the world are committed to pumping up this economy and this market. So while I do think there's a challenge, there's a dump in the markets, I think their view is, let's continue to stimulate. And so if they do that, they provide a liquidity when the markets slow down, we see recovery in the markets. The economy is a completely different story, but I do think we see recovery in the markets.
Great. Just before you get on to Andy's question there, just for anybody that wants to ask a question, you can just put it in the chat. There's a Q&A section too, which somebody put there. You put it in the chat down below, is the best place. And if you click on that, you can actually see all the questions being asked. Go ahead, man.
Yeah, for sure. Yeah, so, and yes, Brookfield Renewables and ESG in general. So, Brookfield, I think they're super active in many places. So Brookfield, one of their divisions, came to put an offer to buy Interpipe this week. They're buying real estate all over the world. So Brookfield Renewables, the stock has sold off a bit with this most recent capital raise. So it's interesting. Keep an eye on it, see how it trades here. But ESGs in general, we've seen institutions take over and say, we want some synergy for how companies are rated. So you've seen CPP, you've seen like the sovereign wealth funds of the world come in and say, we're committed to socially responsible investing, but we also want some synergy. So if I'm comparing, Brookfield versus SNC-Lavalin, you want to be able to say, I'm doing a one-for-one comparison. They're not going to give their grading, and the other company is going to give their grading. So I think there's a way more attention paid to it now than ever, and I think it's going to be more and more important. But the one kind of rating system is going to be very important as I try to analyze it, because I look at these companies, and you can go in and buy like the Jansi Social Index in Canada if you want, buy the ETF. But I think if you look at it today, you're going to get probably 5 banks and 5 energy companies in the top 10. So while that may be ESG for you, I can find another 10 people that would say that's not ESG for them. So I think we're getting there. It's important to pay attention to. National's done a bunch of research on ESG investing and the attention it's grabbing now, both in Canada and globally. So I've had some interesting pieces there. So if anybody wants more on that, we can certainly send that out. but I think it's going to be more important as companies start to think about ESG like as a whole. You know, I did put out in my daily this week about J.P. Morgan, kind of that shareholder versus stakeholder mentality. So you know, I think some of that stakeholder presence and that ESG is going to pop up more and more, because right now most of these conferences you listen to, if you listen to JP Morgan give their quarterly report, you know, they talk about the financials, shareholders. They don't talk about the stakeholders. So, which would be the employees, the cities they're in. I mean, the good they're doing in the community. So I think it's going to rise up, especially as you get that continued divergence between haves, have-nots.
Great.
Yeah.
Anybody else have any other questions? Well, that's good. I'm glad we're back on this platform. It seems to work better for sure.
Awesome. Good.
So, okay. Well, great session. I think a lot of good info on there, a lot of good interactions. So, I hope everybody has a great long weekend. Certainly, if there's anything, email us over the weekend. If we get a chance, we'll get back to you on the weekend. If not, it will be Tuesday. You got anything else to finish?
No, that's it. I think that's great. Thanks all for joining in. I appreciate you coming in, hearing what we have to say, and look forward to continue to keep doing it.
Awesome. Thanks. We'll see
All
you
right.
next week.